Welcome to Me Financial, the podcast designed to inspire your financial life. Hello, everyone, and welcome to the podcast. I am Michelle Moses, your host. I am a certified financial planner, realtor, and former e-commerce store owner. And today, it is a solo show. We're going to be talking about self-directed IRAs and self-directed accounts, I think is what I should say. This is actually a request from a listener. And so I really appreciate this because I never would have thought to talk about this because this is part of my everyday life. I mean, I deal with these every day of my working life because I deal a lot with alternative investments. And if you have listened to some of my other episodes, it is episode number 4 and number 35, and I will reference those again later. Those are kind of my deep dive on alternative investments and how they work. And what I mean by alternative investments is when you want to invest in things like real estate, self-storage, you want to buy your own house, like a house that you would rent out. And these things are called private placements, limited partnerships. You can buy tax lien certificates. And then there's other alternative investments that you could do. You could do like precious metals and commodities. So really, when it's something that you want to hold that is outside of what you can get at a normal custodian, so like Schwab or Fidelity. And you need to think of a custodian when you have an IRA, you haven't paid taxes on the money. So the money is FBO, for the benefit of, and then it says your name. And because you haven't paid the taxes on it, it is for your benefit, but it's really not your money. That's the way I think of it. Until you pay taxes on your money, it's not your money yet. And so you have it in a Roth IRA or a regular IRA or a simple IRA or, your 401k, whatever platform you have it in, whatever kind of account. That's like just the title of the account. But they all kind of work the same, whereas, although the Roth, we should put that kind of off to the side. You haven't paid taxes on the money in an IRA. In a Roth, you have. However, that also has government rules. So you're following all these government rules. And when you're doing that, you need to hold your account at a custodian. And what that means is that they are doing record keeping on your account, and they're tracking whether you're moving $5 from one IRA to another $5. You're transferring that over to, your Schwab IRA or wherever else you might have another IRA. And they need to keep track of that and have a paperwork trail. And they send in the paperwork to the government for your taxes, how much you put in. Maybe you have a distribution, all of that. So they're really record keeping for you. And when you have your retirement accounts at one of these large brokerages, you can do stocks and bonds and CDs, mutual funds, exchange traded funds. That's really the limit of what you've got. But you've got to think of it too that you're getting these from like people that have been vetted. You're not going to be frauded. Yes, the market could go down. Yes, there could be something that happens in the market, as a whole, but you're not going to be frauded out of your money because these people have to go through a vetting process and be reviewed by the SEC and by Schwab or Fidelity or whoever they're on in order to be on their platform. Okay, so it's kind of a safety net is how you need to think of it. And then when you move over into these other custodians that do self-directed IRAs, and sometimes you'll see it as an SD IRA, it's just shortened for a self-directed IRA. It's just so that you can invest in other things outside of the stocks and bonds and mutual funds and CDs. And so you're wanting to kind of expand your horizons and expand your investment horizons, okay? And you want to go to there are these certain self-directed IRA companies around the country. I mean, there's quite a few of them, and there's quite a few that are pretty good too, where you could roll your IRA, but you're not going to be at most of them. I would say 99%. I've never seen another one where you could do stocks and bonds and CDs. It's not a bank. So a lot of times like Schwab and, they have special like banking clearances to where you can buy all of these stocks and bonds and CDs. Whereas when you move over to the self-directed IRA space, they're really kind of a record keeper is the way you need to think of it. Like when you invest in something, they're asking for you to report every single 6 months, a year, just depends on the company. They want reporting on everybody's accounts. What is the asset valued at? Whenever there's a distribution, you need to send it into the account. It can't go directly to the client's house so that we can track it. And so then we can then send the proper paperwork to the government for your taxes and all of those things. So you need to think of it like when you are at these custodians that you've heard of and that the stocks and bonds, like we all know all of this. So it's almost like it's drilled into us with all of these articles and things that we've read over our lifetime. But the self-directed IRAs is when you want to get into something that's a little bit different. So if you're wanting to get into some precious metals like gold or silver, then, there's these companies where you can buy actual gold, you can buy actual silver, and they'll hold it like in a vault for you. And then they'll report to the self-directed IRA company that it's worth $50,000. And so then you can see that there's a value in there. So there's obviously a lot of advantages of that. And I use these all the time to invest in alternative investments. I'm a huge believer in not only investing in stocks and bonds and exchange traded funds and things like that. I really like to diversify with alternatives. And so self-storage, hotels, apartments, which is called multifamily, a lot of that kind of stuff, you've got to hold it in a self-directed IRA. And I think it sounds super exciting. People are like, oh, okay, well, this sounds awesome. And I do think the only downside is that the self-directed IRA custodians, they are not vetting these companies. It's truly, they, reach out to these companies and say, hey, I've got somebody that wants to invest with you, or they get approved on the platform and they fill out some paperwork. And then they're basically saying, yes, here's our address, here's all of our information. And yes, we can fulfill the reporting requirement that is every 6 months or every year. Yes, we can send in this Excel spreadsheet or whatever this paperwork is to update a client's account. So that's essentially how it works, okay? And you're also going to be paying more fees at the self-directed IRAs, right? Because you've got two different accounts. So you're paying an account opening, you're going to pay per transaction per year because it takes a lot more paperwork, a lot more man hours in order to report on these, real estate holdings and all of these different alternative investments. And so you want to, you don't want to, I don't know, you want to make sure you're going to make enough so that you can pay the fees. And I'm not saying it's an exorbitant amount. I mean, I'm with one and it's $50 a year per position. So if you've got $25,000 in a hotel investment, $50,000, $100,000, it's still $50 a year for that one particular position in your account. So it's not like it would add up that much, but if you're not making anything for 5 years, then, you do want to be aware of that. And back on the fraud thing, I have seen some of these limited partnerships, and what limited partnerships mean is, someone says, hey, I want to build an RV park. I want to go raise money for it. Here's the documents. I want everybody to put in at least, $50,000. I need to raise $10 million. And here's all the parameters of what you're going to make. I mean, these people could walk away and disappear with all of your money. So they don't do, the self-directed IRA places, they don't do the due diligence. They don't do any research. You need to make sure that you are investing with someone, because what you're essentially doing is you're sending your money to this custodian, the self-directed IRA custodian, and then they're going to send your money, that check, to whoever you say it to send it to. And then that person has your money. And you are trusting them with your IRA money to then go invest it, and you are trusting them to then send you distributions back to your IRA. And the self-directed custodian is not doing any due diligence or fraud detection or anything like that about whether they are upstanding or whether this is a good investment. Whereas if you're with a Schwab or Fidelity or someone like that, they have done the due diligence to make sure this is an upstanding company and that, they're legit is really how you need to think of it. And so I that's really all there is about self-directed IRAs. In an IRA, I mean, you're never going to be able to hold life insurance and S corporation stock, which is somebody that is like my size. You know, I'm an S corporation. It's just a tax election. You can't hold any of that, and you can't hold any collectibles or anything that's a prohibited transaction, that's kind of a long conversation. But collectibles, you know, like art, you can't hold that in an IRA. So you're never going to be able to hold life insurance or collectibles inside your IRA, but you could do gold and silver, which some people are really interested in doing. And so I think just being aware of the fees, making sure that you're with a custodian that has some good reviews, that's good to, with me in any financial company that I'm dealing with, it's always about customer service, because you know how frustrating it is when you call and nobody knows what they're doing, or they give you a wrong answer, and every single time you call, it's a different answer. And so I'm just really big on customer service, because if you can't get to your money and they're basically holding it hostage, it is like the most frustrating thing ever. And I deal with it all the time. And maybe I'm just telling you that because I deal with it all the time, and it's one of my big annoyances. Anyway, I hope that helps you with self-directed IRAs. And if you are investing in some of these things with just cash, you don't need a custodian. You don't have to have it there. You could just send your cash directly with these alternative investments. But when you actually want to use your IRA for something else besides the stock market, you're going to have to employ a self-directed IRA place. And I've seen every major city has them. And they're at a lot of these alternative investment conferences that I go to. There's not, millions of them or anything like that, and they're not huge companies. But I think if you're asking an advisor and they deal with alternative investments, they usually have an opinion about it, or the investment that you're going with will have an opinion about it. So let me know if you guys have any questions. Again, the other episodes that I have done that are about alternative investments are episode 4 and number 35, if you want to learn more about alternative investments. 35 is much more of a deep dive about the limited partnerships that I was speaking about. Those are for accredited investors, and that means you have over $1 million or $200,000 a year in income. So thank you guys for listening. I really appreciate your feedback, your questions, and I am loving doing this podcast, and I really hope that this helps in your financial life. So thanks so much for listening, and have a great day.